Hey guys, hope you are all having a fantastic day. Today we woke up to a massive run-up in GameStop and AMC, which was then halted. As soon as the stocks were allowed to continue trading again, they both began to dip just as quick, causing yet another halt to take place. Clearly, volume and volatility were huge factors that caused these two giants to run like this. The stocks continued to bleed out for a bit afterwards, but then also began recovering, making up for lost ground. Today was just another day of continuation as apes short squeeze all those short sellers that got too comfortable trying to beat down our beloved stocks. I am interested to see how the halt of our run-up will impact future trading in the coming days. These halts always have the real capability to kill off a lot of the built-up momentum, as seen by how quickly we started dropping in price and how long it took us to begin recovering. One thing is clear, there were alarm signs everywhere with different brokers experiencing all kinds of glitches today. People were notified by brokers such as Robinhood that their 500 calls were in the money when GameStop did not come close to reaching that today. Now, we all know these things as most of my audience has been attentively paying attention to everything going on. Instead, today I want to talk about something major in the markets that began to alarm the entire media and investors. I want to quickly show some of the winners we got today in the Discord. 2 alerts went out for 2 stocks, which both saw great runs after. Come join my Discord if you want to enjoy having alerts that are accurate and have significant gains that can be used to enhance positions in your meme stocks. Now, before we begin, let me quickly state that I am not a financial advisor, and that all content discussed in this channel is simply information gathered that I deem important for people to know, so that they can make informed decisions. All efforts are aimed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Let's dive right in. We have been talking about yield curves for about 2 weeks. I would say my audience is greatly tuned in with everything happening in the overall economy, but I will give a really quick summary before talking about what happened today. Yield curves is a chart that shows how much interest different types of treasuries are paying. On one side are the short-term treasuries, which are repaid in a few months to a couple of years. Because these are short-term, they follow what the Fed will do with overnight interest rates more closely and reactive. On the other side are the longer-term treasuries, which take 10 years or even decades to mature. These yields tend to move with the expectations of economic growth and inflation, so they are less reactive to current matters in comparison to the short-term treasuries. In simpler words, long-term yields are less volatile and reactive. When yields for the short-term treasuries are higher than long-term ones, investors and economists call it an inverted yield curve, and when the chart has a downward line, that is when people start getting nervous and investors start to worry. This is because for long-term yields, treasuries have higher yields for locking away their money for longer periods of time, cause the chart for the long term to have an upward slope. Now, here's the thing. There are many metrics by which analysts and even your wife's boyfriend uses to claim that bad times are coming economically. Some use inflation numbers, unemployment and other data to foretell what is to come. We can all argue the merits of each and every single one of these types of analysis. However, there is one very reliable predictor of a recession, and that's the inversion of the yield curve. Wall Street tends to look very closely to it because it can foretell bad things to come. Economists watch the relationship between different yields, like the 2-year and 10-year, for insight as to whether the bond market is worried about an economic downturn. Others prefer the relationship between the 3-month and the 10-year treasuries. The Fed actually prefers this measure, because every recession in the past 60 years has been preceded by an inversion of the 3-month and 10-year treasury yield. Recessions will typically follow between 12 and 16 months. With this knowledge briefly bestowed upon you smooth-brained operators, we can finally begin about what has happened. The 3-month yield is still below the 10-year yield, but the 2-year treasury yield actually ended up topping the 10-year yield for the first time since 2019. There were other yields aside from this that actually inverted as well, and though they don't all have as good a track record at predicting a recession as the 3-month and the 10 yield, they do show that there is a trend of bearish sentiment. The last time the 2-year yield inverted the 10-year yield, we experienced a global recession. The Fed is telling us not to panic, with Jerome the Joke Powell saying that the economy is very strong and pointing to continued growth and healthy job markets. But Jerome Powell also told us inflation was transitory, and was the individual who actually led the charge in setting us up in the current predicament we are today. Bank of America analysis are now beginning to say that the 11% surge stocks have seen these past 2 weeks have all the hallmarks of a bear market rally that will give way to even deeper losses. They are now saying that there are warning signs flashing that the market has climbed despite clearly weaker fundamentals, something I have been preaching for weeks now. Sharp rallies are typical of volatility in bear markets, so let me bring caution to you guys that the sell-off that major benchmarks and stocks had these past couple months can actually get much worse. Today's 2-year Treasury yield inverting the 10-year is another huge alarm that should be worrying investors. Still, bulls are rationalizing this by saying that the reason yield curves are getting flatter are by design, mostly because the Fed has been propping up the economy in two ways, by keeping crucial short-term federal funds rate near zero and by quantitative easing buying Treasury securities to help keep longer-term rates down. I totally get why bulls are confident in this, but you would have to ignore pretty much every other warning sign out there to believe that the economy is fine and that there aren't more warning signs everywhere. Inflation is bound to continue growing. Stagflation is here after all. We also have an unpredictable mess in Ukraine and the Fed has been teasing an even more hawkish stance to combat inflation. Still, feel free to let me know how you guys feel about this. Again, long term, I only trust two stocks, GameStop and AMC. I strongly believe in them and I couldn't care less if we start dipping back to single-digit prices. Let's now talk about today. The Fed submitted over $1.718 trillion in reverse repo operations today. Dark pool trades for AMC accounted for 56% of the total volume today, while dark pool trades for GameStop accounted for 55% of the total volume today. AMC had a larger amount of buy orders than sell orders, with GameStop also having a larger amount of buy orders than sell orders. Now, let's talk about performance. AMC had a bullish day, gaining under 1%. AMC was super volatile today in the pre-market. Once markets opened, the stock began frying, running to 34.33 before dropping down to 26.50 as a result of various halts in trading. After this dip, AMC began slowly climbing back up, reaching higher highs and higher lows. It began dipping near the end of the day, closing at 29.44, below the VWAP. It is literally impossible to determine where we could go next. The only support I can think of lies at 29, 27.50 and 26.75. Resistance will be met at 30, 31.34 and 34. GameStop had a bearish day, losing over 5%. It began trading relatively weak in the pre-market up until markets opened and GME ended up running from 188 to 199. After the halt, GameStop began selling off, finding support at 165. After this fall, it began climbing back up, consolidating around 178 and then running to 193. Nearing the end of the day, GameStop started selling off again, closing at 179.90, below the VWAP. Support could be found at 180, 173.99 and 165. Resistance will be met at 187, 195 and 200. It was a very wild and crazy day with the way trading began. There is so many things happening behind the scenes that we do not know about. Remember to stay focused, try to stay zen and understand that this is not big money covering. This is simply small money getting squeezed out. Whatever happens in the coming days, do not lose sight of why we are here. Do not day trade GameStop or AMC unless you are playing with options, which I will also warn you to be very careful about. It is impossible to predict or anticipate what will happen this week, so keep that in mind with every single trade you make in regards to these two beloved stocks. Buy the stock, hold it and forget about it until we reach the moon. I am always available in my Discord, so if you have any questions, tag me there and ask away. Again, please do consider joining my Discord, we have so many things happening there. We are day trading and putting all those profits back into GameStop and AMC, so if interested in alerts with over 99% accuracy, which you can verify for yourself, please come join us. The link will be in the video's description and in a pinned comment below. Also, one last thing. I wanted to let you guys know that I have begun working on more content for morning videos. I know those have been gone for a while. Trading and Discord have taken a lot of my time, but I am beginning to feel comfortable with the changes I have had to make, so I should be able to begin pumping out morning content as well. I think I will begin posting it in the morning and then also attaching the content for the afternoon videos in case people missed it. I know I have a solid amount of viewers who like those, in particular the housing market videos, and there is so much happening outside of stocks that we need to talk about that it would be a crime for me not to bring it up. Expect that to begin rolling out at some point next week. Thank you all so very much for making it to the end of the video. Let me know your thoughts down in the comments below. And most importantly, remember to come join my Discord. If you want to support this channel, I have a Patreon link in the description as well as some one-time donation links for Cash App and PayPal. Thank you again for being a part of this channel. I will continue striving for better content. Enjoy the rest of your day. Keep on buying the dip and to the moon.